All right, so you're pretty much ready, Alec?
Yep, let's go.
I just drag the screen over and mute my. Sometimes I forget to mute and it echoes. Let me do that real quick. All right. Oh, Doug, you're fast. First into from YouTube land. How are you, man? Doug, where are you? Good afternoon. It's quite noon here. So guys, I have Alex jumping on today and our good buddy Mark, who's from our team, and he's been with me for a long time. You guys on?
Good morning.
Yep. Hey, guys.
How are you? So Mark's in Wisconsin today, right, partner?
That is correct. Green Bay.
He was just talking about. So you're in Portugal, Douglas. There's still people rolling in, but Mark was just saying about how he had record snow. What were the numbers?
26 inches of snow.
Just what, a couple of weeks ago?
Yeah, 5 weeks ago in April.
That's amazing. You know, Colorado was always April was always the snowiest month, and it just snaps everything. Where all your branches and power lines down.
No, it wasn't that kind of storm, but it was a lot of snow. Third highest total ever.
Wow, ever's a long time.
Yeah, the last record I think was 1882.
Whew. That's just that old sunspot cycle we talk about.
Absolutely.
Colder and colder, you know. Well, that's good. Well, what do you guys want to talk about today? I had some crypto up. Crypto's been pretty quiet. We'll pretty much trade anything that moves, and so we've had a pretty good run with FX this week. And Mark, I know you share the same views. You've been pretty bullish the dollar. You guys, I guess we could talk about global macro. What are some things that you wanted to hit on, Mark? I know. I'm in here a lot of times. We're hitting the 15-minute chart on the euro, and then we're talking about the usual coins we like. But I thought we'd spend some time talking big picture cycles, and then I always like chatting with you because you see the bigger picture when we talk about Europe. And we've had a great call being long dollars really since 123, 124, and then really kind of leaned on it once it started to break.
Yeah, we had an 8% run in the DXY here, and
it's just been
month
massive.
and a half. That's a massive move. So I would expect some consolidation or retrace here.
Yep. And most of the alpha, really, if you look in global macro markets, in other words, for those people that are joining, maybe may not know, but the certain areas or different markets where most of the money that's been made or the price, the trends that's really been flowing where the energy has been, the best opportunity has really been long dollar. You haven't had a lot of movement in stocks, right? We've kind of been in this consolidation mode. But man, I think, we talked about the positioning on oil. We have record long positioning on oil that reversed. But really, the short dollar position coming into the year and even all the way up until this month has been very crowded. Everybody's bearish the dollar. And so I think there's some really bad performance out there. I mean, we've been on the right side of it, but I'm not sure that's the case for most people. I'm trying to get, not quite sure why I can't switch screens here.
So you guys are talking about the dollar. Do you think that has any correlation to Crypto market cap yet?
What do you think, Mark? I know you've got a couple thoughts on that.
I think it's starting. I mean, if you look at some of your emerging markets where their currency is collapsing, you talk about Bitcoin being volatile. If you lose 50% or you run away in hyperinflation, Bitcoin might be a good place to park your dollar instead of a Turkish lira.
Yeah, absolutely. We were talking about that in the chat room yesterday. For those of you who haven't really been following, I can't change the time frame. I'm gonna have to close this and come back. Maybe I'll go to my MetaTrader 4. I don't know what's up. Why I can't change my time frame. But this lira move, let's see, where is it? I got it kind of hidden in the back of the stack.
There it is.
It's just been, I mean, talk about a monetary on the verge of, a monetary collapse. I think we've already been in one. I mean, I remember when we spiked here in September of 2013, and I thought, man, that looks pretty toppy. Maybe that was it. That was at 2.3. We almost hit 5 this week.
I remember that. That was a big move.
That was just nuts.
And then you had a retrace and another move that took out that high. That's when we started to get some, right there. I know we traded that one because there was some conflict whether the Turkish aircraft was shot down or Aragon was making headlines.
Yeah, taking out all his competition. Remember that? That little coup or fake coup or whatever games they're playing over there. And a lot of times when you have a currency move like this, it can signal different things, but obviously capital will flee the battlefield. So I think you've got a lot of that going on. I think, they've got, obviously, it seems like a lot of dollar denominated debt. So all of EM just trades terrible, So everybody that had this bearish dollar call, and even some of the Dunlocks of the world, the last time I heard them talking, they were actually pretty bearish the dollar and they liked EM, and that's all completely gone the other way against them. So I haven't really, to be fair, I haven't really heard what his call is, but not that many people were making the dollar long call. And when you get this big of a move, it just completely blows up the emerging markets.
And that's how I think it's going to eventually tie into Bitcoin and your major crypto coins.
Yeah, I think it has to. I mean, it's kind of like, I guess like Marty was saying in his blog the other day, I agree with him that we're not going to solve this massive world debt problem and the central banking that's gotten out of control and the corruption. Crypto's not going to come in and we're going to be proactive and solve everything. The whole system's a mess, and we're probably going to have to crash and burn. And then crypto is going to be like the phoenix that rises out of it, and I think it's going to provide a lot of the solution. But I just think
you have to look at it now as an asset. It's a place to park money.
Yeah, and that's kind of what we said. It's on that asset side of the equation. We've always talked about. I'll just draw it out. When you think about assets are on one side of the equation, right? And then you have money on the other. Well, like for example, here you have the dollar rising and the lira collapsing. Well, if your currency is absolutely collapsing, right? Then the then the value of this asset on a relative value basis is rising. Or the best example is 2008 when assets were collapsing, whether you looked at stocks or real estate. Well, the purchasing power of your money goes up, right? So the fact that we're pricing Bitcoin in dollars is one of the things that tells you that Bitcoin's on the asset side of the equation. But if you think of, which is a good thing, I mean, because if we were pricing things in Bitcoin and Bitcoin went 10x, then what is the value of your assets? I mean, that's a problem. Or if you were taking loans, what if you had a loan on your house in Bitcoin and the price is moving around like that? I mean, it would be would be nuts. So it depends. One of these is always rising, then the value of your purchasing power is going down, and then the opposite is true. It's like we always talk about it being like a seesaw, right? There's one's up, one's down, then it switches and comes back up. But we definitely have crypto still on the asset side.
So you think there's going to be some sort of bigger catalyst, and it's not just going to be a more gradual replacement?
I mean, I definitely think it'll be gradual.
Up until a point where
the problem is in the governments this time, and I think the confidence is really going to collapse when the ECB might be the first central bank to blow up. The problem in the financial system in 2007, the risk was really in the private sector and the banks and real estate and everything tied together between all the derivatives and everything else. But that was largely in the private sector. Well, we went through that and we transferred some of that risk to the central banks. And but at the same time, we give a lot of focus, I guess, in the crypto community to central banks. And it's fair to say, don't you guys think it's pretty libertarian community? And a lot of guys and gals in crypto don't really, I remember them saying at the conference, Alec, in Toronto, a couple of those guys were like, I would like to see crypto completely replace the central banks so that we never have a central bank again.
Mm-hmm. Yeah.
And I get that, but at the same time, that's probably on the extreme side. When we see those banks get in trouble, though, there's going to be a big confidence shift where I think.
I agree. I think it's confidence shift between the central banks and the private assets is what will drive crypto up. But for the guys that say crypto is going to replace everything, it kind of reminds me of the gold bugs, that gold is the only thing to own and it's going to go sky high. Well, if that's the case, you're actually rooting on the end of the world for gold to be that valuable. And the same thing with crypto. You're rooting for a collapse of society in the world. And will you even have electricity at that point then to spend your crypto?
Right. Yeah, exactly.
Bigger things to worry about at that point.
Yeah.
And then what really has value? Guns and ammo, and maybe
food,
a couple of those
water.
farms up there near you, Mark. Yeah. And then the other thing I think about too is the really big money has to park in some sort of, treasuries park in the bond market because it's one of the deepest bond markets there is. So that obviously kind of goes hand in hand with the dollar. When you have a big risk off move, meaning like 2008 again as an example, if you have the whole world getting tapped on the shoulder and in margin calls, they're turning around and parking money in treasuries, and that puts a bid to the dollar also. But we don't have cryptos are really not tied to any deep big bond markets either, so that's something that kind of has to develop. I don't know what that looks like. I don't know if the crypto needs to start really acting more as a currency, or if we tokenize a lot of these assets, like some of these projects like a Polymath want to do. And next thing you know, we have bonds that are quasi bond features, but also digital or, on a blockchain. I don't know I think that's something we have to evolve into too before the whole monetary system is, cryptographic and blockchain based.
Well, do you want to just run through the majors real quick?
Yeah, let's
a little update.
Crypto. What's up, guys? If you guys got questions or stuff you want to hit on, I'm kind of trying to pay attention to both chats. But what's up, Huok? I'm not sure how to say your name, partner. You're from Germany? Yeah, Alex. So I wanted you to kind of lay out. You're pretty good on some of the smaller projects. You're pretty opinionated about the ones you don't like for certain reasons and the ones you do like. We should talk about those after we hit the majors here.
Sure. And if anyone else has anything they want to see, just
or any of the stuff that you like, Mark. So let's see if I can get these longer term cycles up. That's kind of what we entitled the session today, right? So Mark, you were really kind of pretty impressed by this. There's actually a longer wave I laid out over here. Let's see if it'll even pop in. So for those of you guys that may not be aware, there's all different kinds of cycles, but we really like to kind of pay attention to 8.6 frequency, which happens to be a derivative of pi. And so sine waves will actually repeat on a period of pi or 2 pi or 9 pi. I had a graph of that up on my other computer. And so these are about turning points in time. And what we kind of care about right now, where we're at as far as the market, is this 8.6 wave. And this the 8.6 wave on the daily has done an amazing job. So we've talked about that before in here, right? We've got a high here. That's this red line. You guys can all see it. So these are about turning points. So we got the high there at the end of the year, right? We had another turning point here on the reaction low, right, with that turning point here, minor turn there with this point in time, boom, the low right into our pi line, right? Had another turn here with the cycle, another turn here with this cycle high, another little minor kind of wiggle, right? What was that? I guess the beginning of April. And then we had this second kind of major double bottom in front of 6,000, but that came with the turning point. And this low also came with the turning point on the weekly level.
As did the previous one on the weekly.
You're right. Absolutely. And then I laid out the 8.6 month, but there's another wave, guys, that came up here that's even longer with the peak. And then it rolls out like this actually into August and September.
And that's your monthly 8.6. So we had the high in December. 8.6 months will take us right into the August, September timeframe.
Yep.
Which will also coincide with another weekly.
Yeah. And what that looks like, you're right, Mark. It looks exactly, I just kind of shifted the chart. I put that on our Twitter, I believe, last night. But when we get into September, October, actually, this is what it starts to look like, is that longer term sine wave starts to come up. And then we have the, like Mark was saying, this 8.6 turns up, and then even the daily is turning up. So this will be a really, I think, pivotal point here once we get through the summer. Now, does that mean, we could just as easily break 6,000 and have some sort of like final flush out low and then break out maybe at that time frame? We could bottom here, take out 10,000 and then rally into that time frame, and then maybe we have a major high. That would be a cycle inversion, right? Where the price actually goes down with a major upturn in the waves or the cycles. So we'll kind of see. It's not really about saying, hey, price is going to be at a high or low, and we're going to trade it right now based off of those cycles converging. It's just more about how we want to play it as we get closer to that point in time. But the market certainly trades like it's just still kind of sleepy in a long-term holding pattern. Don't you guys think?
Yeah, and if you actually pulled up a chart of the Dow, it's basically consolidated the same way as Bitcoin. We had the high in January, then we had the washout low early February, about the same time as Bitcoin, and then we rallied back, and we also had a washout low here, I think, in April. Mm-hmm. And it's just consolidating. So I think the markets are consolidating right now.
Yeah, you're right.
Waiting for a catalyst or something to move it.
You're right. Everything's connected. So this is what you were referencing, right, Mark? I switched the screen here. So So this is the S&P, but we've had this drawn in our room for a while. I mean, this is that consolidation that Mark's talking about. And I think stocks trade better. They are making higher lows, and then we actually had another subsequent higher low this week. But you can see we don't quite have the new higher highs, right? We're basically flirting with a higher high this week, and then this last bounce here in April, but we're not quite to a new high. So yeah, I think we'll see. Well, you've talked too, Mark, about how there's been a little bit more of a correlation to stocks and Bitcoin. And so we'll see if we do get a higher high, maybe crypto will kind of wake up. I think crypto kind of trades more like a riskier asset right now versus something like treasuries, But yeah, so we're looking for that. We'll see.
But it's a similar chart pattern. Bitcoin's still been making higher lows.
Yeah. Yep. Still don't have a higher high, right? So
and we still don't have a higher high.
Yeah. So we have lower high, lower high. This 10,000 level becomes the pivot for sure. And then at the same time, we are making higher lows. So this was, in futures, this was a higher low than the intraday low at 58.80. And then right now it's kind of, are we going to retest the double bottom down here, make a triple bottom? Or are we actually in the process of maybe getting above the 8, kind of turning up here?
And we're right in the middle of your 8.6 weekly cycle. So I think we're going to make a move here one way or another.
Mm-hmm. Yeah, definitely. I think that's well said. I mean, the futures, let me get some of this crap off of here. The overall market cap's been creeping up, HY. He's asking, guys, do you keep an eye on that as a gauge? Alec,
I don't know. I mean, I kind of do, but at the same time, Bitcoin is still almost half of the market cap. So you watch Bitcoin, you pretty much follow whatever the market cap is.
Mm-hmm. And we've discussed that, but we really should probably start charting it out as well.
Mm-hmm. Yeah, especially as the market cap, the dominance is reduced.
Yeah.
But we also watch a lot of markets, so it's hard to chart everything.
I know.
Yeah, is like market cap, is that chartable on any of these softwares? Or do you actually have to like compile it somewhere?
Well, I think on CoinMarketCap you'll get a line chart,
Yeah, but I'm talking like on TradingView or something where you can actually.
I know.
I think you have to write. I think somebody was writing a script, but it would take quite a bit of input, I believe.
Yeah, that makes sense.
Well, someone get on that.
Doug, somebody pointed out that the 6th of the previous month was a BTC pivot. Oh, the 6th of every month. Yeah, that's kind of interesting. I mean, it's tough for, I guess, you to pick one day out every month. But that stuff matters. It's something that you can take a look at. So today's the 5th. We had our monthly closings yesterday, which matter. So 5 trading days from now, that puts you into this cycle high right here, actually. The top of the daily. That's on the 5th or 6th, right into there.
But charting is recognizing patterns, whatever pattern it might be, and then play in those patterns. You know where your risk is.
Yep.
And you need risk management. I mean, nobody knows exactly which way it's going to go, but you chart and you look for repeating patterns and you try to play those patterns with your risk above or below what happened last time.
Yeah. Hey, pull up that link in Zoom real quick, Jason.
Oh, okay.
And none of us can sit here and say Bitcoin's going to go up $300 tomorrow. We don't know that, but we know where to take our shots and where not to take our shots.
Yeah, that's right. Yeah, I mean, that's, you got to kind of put the two together, right? You have the price, but the timing piece is, hey, when do I wait and be patient? When do I want to get a little bit more aggressive?
It's interesting though.
Oh yeah,
It's very.
Okay, so this is the chart, right?
Yeah,
you're talking about. Oh,
I think that's what they're referencing.
Yes. Yeah, I seen that as well.
Wow.
So if you were trading this, you would start nibbling on some Bitcoin long, and your risk would be at the April 6th low where you'd cut your loss.
Yep. I agree right there.
That's what a trader would do.
Yeah. I mean, we like scaling in. I agree with this. Even if you broke the trend line, I think there's probably a lot of traders that are going to be a little bit too technical there. I mean, I'd hate to stop out right below that trend line. You might, as like Mark's saying, I use that low. It's better. Or if you really have a longer time frame, you might as well use the intraday low as well.
But February 6th to March 6th is 4.3 weeks. And then back to April 6th is another 4.3 weeks. So you're at your 8.6 cycle. It just happened to all line up on the 6th, which a day either way. But it was still basically what you were showing, Jason, with your sine waves.
There we go. That's pretty amazing.
Crazy.
That is pretty crazy. It just shows you. I mean, it's amazing how cyclical Bitcoin's been. That just would show anybody. I mean, you think that those cycles only would play out in the deep markets, something like S&P, or it's like, no, here you have a brand new asset class, and it's been absolutely. I mean, we had 10 out of 11 cycles. We had exact turning points. It was pretty fascinating.
It is. And whenever I pull up a chart, the first thing I do now is start counting candles and look for a pattern. Especially on your longer time frames where you really want to take your big shots.
Yeah.
If you're day trading, not as important, or you look for other indicators. But when you're a long-term swing trader, you're looking where to really get heavy.
Yep.
Or to lighten up or cut risk.
Yeah. And to hedge. I mean, this was a big spot here. Nobody probably really had that because there's nothing on the chart. If you're just playing technicals, you might be looking at the trend line that broke there. You might be saying, there's no real resistance till, I think I was even looking at that. There's no real resistance till 13,000. There's not a lot on the chart. And then all of a sudden, out of nowhere, you just top. But if you were paying attention to that cycle, you knew, all right, we bought stuff well into pie. I'm okay with lightening up on 3/4 of my position up here, type of thing. And then these cycles have been pretty powerful. What else did you guys see going on news wise? I had some opinions about kind of what's going to get these institutions into the market. But Alec, what was, just like we would do on the Buy or Sell What the Hell podcast, is there anything that you found interesting this week news wise?
I honestly haven't seen a lot. I think it's been kind of slow when it comes to news. I mean, development, obviously there's a lot of things going on, but I think the focus is on these global macros, like with Italy in the news. You guys have an opinion on that? Like what happens if something like that
Mark, you can take a crack out of that first.
As far as how Italy would affect the market, or just the dominating the news cycle right now?
Probably both, I guess.
Well, to me, no news is good news.
Yeah.
And I like that Bitcoin's been quiet. That's when you want to start building a position, and not in December when everybody's hyping it and every kid's going to be a crypto millionaire.
Oh, that's exactly right.
And I wonder if a lot of people have given up on Bitcoin or forgot about it or not paying attention to it.
Well, and you talk about, like we talked before we jumped on, the financial media is really kind of a joke to anybody that trades professionally, but the only reason to really pay attention to it is just because it's helpful to see what the mainstream is anchoring on. And we talked, obviously it was Bitcoin all December, right? And then this week when we made the low on the euro, the first time I think I've ever seen Fox Business talk about FX spot prices, they had a big picture of the euro flag on the screen for like 3 minutes. I was like, okay, that's probably the low.
Yeah, let's cover our shorts and wait.
And so, yeah, Bitcoin's been very quiet, like you said. That we're closer to the lows for sure.
Yeah, I had thrown up a chart in the crypto room on the declining volume as well, and every low has had less volume. So it's definitely under the radar right now, and I think smart money is accumulating.
Yeah, and I guess that could go either way, right? I mean, the way I see it is if we break 6,000, you do have to cut some risk just because that's, who knows, you might take another 50% drop, right? Why sit through that? But I wouldn't be surprised to see the volume pick up. You run a bunch of stops and then you put in that, like we said, that final flush out low. That's definitely could play out. It just is what it is. I was trying to see if I can.
I think for crypto, at least, I think EOS has been taking, all the news spots this last week.
Oh yeah. And then have they launched their blockchain yet?
No, I don't think so. There's a few different rumors going around about vulnerabilities but a lot of people are saying that that's causing that little bit of a retracement here is because they're, selling off a lot of their Ethereum they've been raising lately.
It could be. Well, definitely one of the bigger sellers. I mean, we have a couple guys I talk to that sees big over the counter flow. The biggest flow we've seen is 100,000 BTC, so that's 900 million. That was about when Bitcoin was at 9,000. And he's saying he has tons of buyers. They're having troubles finding legitimate real sellers right now. So to me, that's the institutional world that all wants to come in and buy. Like, because these institutions, the pension funds, all the big money wants to get into the space. It's just going to take them a while. But I think there are a lot of firms that are a little bit more flexible, maybe like family offices or obviously the faster money like hedge funds. Or even some of these like investment trusts that like Grayscale runs, and these guys are starting to accumulate because of the demand that kind of the institutional side wants, the exposure to the asset class. Nobody wants to miss this, this brand new technology, and it's still such a baby. Yeah, if you were in 2009, right, you have billions of dollars worth of Bitcoin, and you're one of those few really early. But when you talk about just like the Ethereum platform, what are we like? How many years has Ethereum really been running? 3, 4?
Yep, 3.
So
it came out in 2015.
So it's not like this market is 15 years old. It's not even. It's still a baby. And so these institutions, they don't want to miss the next thing. And as soon as we start to get above 10 again, and I mean, if they're not quick to kind of, I think the big thing is the custodial piece. Like, I know we want to be all decentralized, but how are you going to get a pension fund that has, or whether it's a teacher's pension fund, or, Mark, you talk to a lot of union guys in your work, or it does, whatever the pension fund does. I mean, they have their fiduciary responsibilities where they can't just, they have to, if they're going to invest money into crypto, they need to make sure that the custodial piece is intact. And I think that's the biggest thing that's kind of holding back the institutions from getting in faster.
I would agree. And I think once they start launching some ETFs, you're going to see money flow because you still have to match the ETF with the holdings.
Right. So those guys are going to be massive buyers in the cash market.
Mm-hmm.
Yep.
It's interesting. So the EOS crowd sales smart contract, where all the ICO participants, all the funds are sent to, just transferred over $1 million worth of Ethereum to Bitfinex just about an hour ago.
Really?
So you could see the flow of the asset right to the contract that Bitfinex owns.
So did they hit the market?
I don't know. I mean, there's no way to tell from there, I don't think, but it'd line up pretty well with their release. I don't know if that means they're just planning to buy EOS, so they want to, maybe hurt Ethereum, their major competitor. I don't know. I don't know how they're doing. It's interesting.
If anybody has an idea of like trying to, I don't know, hit the market down on Ethereum because you're going to keep it down, that's like trying to. That's like trying to peg, the Swissy to the euro, and the euro is collapsing. Good luck with that.
Yeah, I mean, it'd just be short term.
Short term.
Mm-hmm.
Now, Ether looks good here. It's one of our biggest positions right now. I know, Mark, you're pretty long it too, right?
I am. I like Ethereum long term.
There's been some pretty good ebb and flow. We bought some Litecoin well in this dip right here earlier in the week. I didn't grab any more Ethereum on this dip, but I lightened up a little bit yesterday. We'll see. I kind of want to see us punch through 590, 600 area, get above pi. And then I think we probably got another pretty good run ahead of us. Where was that last cycle peak? It was 750, I think, is the next resistance. 720. That's kind of what I want to see over the intermediate term. We can get above. You even have a little bit of resistance at 614 from the 24th. Get above there, then there's really nothing much till that above 700 again. That's kind of what we're holding on for next. Alec, what other smaller coins do you want to hit on? Or you guys want me to go through the majors here directionally? I didn't really do that.
Yeah, hit through those and people can type whatever they want. Whatever they want to see.
So we talked about the cycles. Now we just talked about the price. So we've been in this intermediate term downtrend, and you can really see that by the direction of the 8. So that's something that we like to do. Markets are fractal. It just means that there's smaller self-referring patterns will show up as you look at different time frames. But so here we have a view of we have a cycle view of the long term. We have a trend view of the long term, right? And so the long term higher lows, if you look at a weekly or monthly, are still in check, which is that 6,000 level. So technically all you did is we had a massive pullback from the highs, but considering we went 10x, it's actually, relatively speaking, pretty normal as far as the trend longer term. And so it's still making a higher low where it should have at 6. And then within that, we've had different ebb and flows, but you can see the direction of the 8 here. We had an intermediate term uptrend, then we had an intermediate term downtrend, then we had an intermediate term uptrend, and we've been sitting in this intermediate term downtrend. And so just a simple way to look at that is, hey, is price above the 8? And then what's the direction of the 8? And we haven't quite turned that 8 up yet. So the way you can play that is, you could scale in to your bigger picture levels and then wait to get more aggressive once you get the intermediate term in your favor also. As you could be a buyer here, you get a little bit of a pop, you lighten up. But if you were scaling in here, as soon as you get that turn, I don't know if you guys can see that, but these are the lower highs on the intermediate term. And then right when we took out this high here, you got what we call a real money candle in our model. You took out that prior high, boom. Now that's the time to get aggressive. We call that the right-hand side of the cycle. If this is your sine curve or your cycle, it's not always easy. It's not always easy to pick out, but that's the idea. So that was a spot we really like getting long, and then you had good follow through. So kind of looking for the same thing again Hasn't quite shown up yet. I think we're close. So that's going to be this similar view across the majors. I mean, Litecoin, same thing. Pretty much look at any coin. It has the same intermediate term direction of the 8. We can get above there, same thing. Litecoin hasn't quite done it.
A lot of energy building up in the Litecoin chart.
I think so, right? We got a triple bottom down there. I guess on the downside, though, you would have to give this a lot of respect that, I wouldn't be afraid of moving to the sideline if it were to break and just wait and see. You can always get back in. But yeah,
when you look at that, you talk about the coiled spring. There's a lot of coiling going on. The high and the low. The lows are getting higher and the highs are getting lower, and that energy is coiling.
Yeah,
ready to make a move.
And you can probably see that on the 4-hour, right, Mark? I mean, you got a lot of people talking about the flag down here. It definitely can. It's like a volleyball underwater, basically. You hold it for so long, and then. So it'll be the same on Ethereum. It's actually, Ethereum's a little bit different. You actually have higher lows relative to BTC. It's kind of BTC and Litecoin are back kind of sitting on the floor with that triple bottom. Here, we talked about this. This is a really interesting, what we call bullish engulfing pattern right here. Right at our pie line, right? So I think that's a really high probability setup that was your higher low. And a couple things I see right off the bottom there is that we have a wall concept. It's pretty simple, but the bulls put up this entire wall from the low to the high around 800. And naturally, you could do a fib retrace, but just to keep it simple, a lot of time markets will pull back, and starting to accumulate at halfway or lower kind of gives you good location. And so we're kind of right in that zone. In addition to our cyclical concept with the pie line, I don't know if I'll get into that totally right now, but that's this dashed green line. We're right in that location. You have obviously an RSI that's telling you you're oversold. Don't really need the RSI to tell you that. The cycle's low. And then a bullish engulfing pattern is just simply when you have the bears put in a big fat, right? It's bearish. And then it experiences no follow through. Typically that type of candle should experience follow through. And when it doesn't, and then the bulls come all the way back, I guess I'll draw that in a different color. Whoops. So you get the move down, big fat red bar down, and then the bulls are able to come back and take that entire bar out. That's a bullish sign. That's a setup in our model, because basically the bulls have said, you know what, we're in control. That's exactly what you got down here. So
I really like this chart. You had the RSI nip. You have the cycles coming back up. You had the bearish or bullish engulfing. You have holding above the pie line, and you have a cup and handle. I just think this is a bullish setup here, and you know where your risk is.
Yeah, you know your risk is. So this is part of why this is our biggest position. And, you give it a shot. Your risk is right there. You can get aggressive there, and you've got all of this potential on the upside. Maybe you don't break 8, but that's a much better. It's a nice risk reward there. And if you take that low out, it doesn't mean that we completely kill the position, but we teach our guys, when you can identify something like that you can get more aggressive on. And so whatever you add there, you put the stop right below the low. If you take it out, fine. Maybe you take out whatever size you put on there, you take that off and go back to a smaller position in case you fall back to the lower level.
So it's not one of those shows where we talk about moons and Lambos. We actually talk about technicals, real trading.
Right. Actually, yeah, exactly. anybody that has a Lambo, I kind of doubt that they ever traded that amount of coin and know what it feels like when you have a 50% drawdown, or have, I know what it feels like to buy 200 million tens, and you take out a setup like that and you just watch it go against you. You'd be glad you cut your risk. And you probably won't do that again if you sit through a type of drawdown like that when you really get aggressive. And then Bitcoin, that was a pretty good couple of lessons right there in that chart. And then Bitcoin Cash is the same thing for the most part. You got a higher low. We made nice sales above 1600 and then started to kind of feed back into that position. Very similar setup. Pretty amazing, almost the same chart. I mean, I don't have a pie line on here because I guess the data doesn't go back far enough, but there's your bullish engulfing. It's at a higher low, about halfway, a little bit over than halfway back the prior move. Yeah, so that kind of covers the majors. Alec, what did you want to hit on? Or what did you guys in YouTube land, what are you guys seeing? ICX, Cardano, okay. IOTA had a pretty good move. Yesterday was a pretty sleepy day in crypto, and let's start with that one. It was actually, it's had a good 4-day rally. This is kind of what we're expecting the overall market to do. I mean, if you guys start to kind of see these concepts, they're simple, but they work. I mean, here's the strong move up. Look where the market held, about halfway on that pullback. You had the RSI like we were just talking about, the cycle's low. And then boom, just try to follow. I was late on this. We talked about it yesterday in our team. I kind of wish somebody would have, I should have probably picked up on that too. But you buy that candle, again, stop below the low. It's probably going back to the highs from May. Are you guys long this at all? I don't have a position here right now. Mark, do you?
Sorry, I do not either.
Yeah. But this looks good.
You can check out Funfair too.
Funfair. I mean, I don't know if you can chase this right now. It's up 4 days, kind of a little bit late. I probably wouldn't chase it. I guess you could buy small if you wanted a core position, but you got to be prepared for a pullback and then put your cash to work on that. But same thing, as long as we're above this high, it looks pretty good. You're making higher high. You're making higher highs here. Here's your higher low. Here was a higher high. So this is all bullish. I mean, the fact that this made a pretty good major higher low here, you're probably going to get a higher high. That's what the trend would tell you. Which one did you say? Let's hit on this ICX, I guess, real quick too. Let's get sticky. I don't know much about this coin. Alec, do you have an opinion on this one from project perspective?
ICX?
Yeah.
Not really too much. I haven't looked too much into it. I mean, they have a pretty good reputation, team-wise at least, which really means a lot.
Well, here you have the same swing line going on. There's that same bullish engulfing, right? You got above the 8 here. Just kind of waiting on the market to turn up. The cycle's turned up. But this is a higher low relative to here. So that's bullish, right? Here's your bottoming tail that marked the low. And then you got a higher high. So this market is in a confirmed uptrend. You definitely want to be a buyer here at these levels instead of chasing the highs, right? But there's something I can share with you guys today is that if you make it a habit of buying higher highs, you're going to be performance is going to suffer. Most of the amateurs or novices or even the professionals who have really poor timing, and it's most of them. I mean, there's a lot of pros out there that just They have the same habits. They get emotional. They're waiting for confirmation. There's so few people on Wall Street that actually have a timing process. And so they're always waiting for confirmation. And so what tends to happen is people don't want to buy a red. They don't have a process to buy when the cycle's down. And then they end up chasing, they didn't want to buy here because it was going down. And then they miss the turn. And then they don't buy here because, I'm coming up on this high and I'll wait till the high gets taken out. Oh, okay, now I'll buy. And congratulations, most of the time, more times than not, you'll end up buying the exact high when you try to buy higher highs. So what we try to teach is be a buyer here, and then you come out on new highs. So that's one of our rules I teach my traders. You always want to be coming out. You don't have to get flat, but you want to be taking profit on new highs. You want to be taking profit on new highs and then feeding back into it, taking profit on new highs. You know how many people probably chase this new high right here? You guys know what I mean? You know how many longs are right here because they were waiting for that new high? This is where you wanted to be buying. Take some off, maybe up here, buy some back, and then boom, you get that new high. You got to be taking profit. So anyway.
Absolutely. And they'll be waiting a long time to get back to even.
Right.
And then when they do take out that candle, they'll probably sell because they've sat on a loss for so long that they'll just be happy to get a profit, and then the market will really run on them.
Yep. Yeah, I mean, if you sit through this much of a drawdown, there was buyers here that were probably selling here, unfortunately. And then what creates, to Mark's point, what creates that halfway zone a lot of times is the people that are long from the wrong part of the cycle. Just to get back halfway feels so good to them that's what kind of creates that selling pressure as you get halfway back up.
Mm-hmm.
Anyway, that looks.
So if you are going to buy breakouts, you have to buy small.
Buy small, or there's even another type of breakout that you kind of want to look for. So where the market comes from matters, right? So if you're coming from a low place like this, from after a big run to a new high, that's not a breakout that you necessarily want to buy. Or to Mark's point, you can always put on a trade somewhere, even if it's really extended. If you buy small, because if you buy small, because I want to capture the longer term move and I don't want to miss it, that's okay. But you got to be prepared for the pullback. If you pile in, like to Mark's point, aggressive all in on a new high like that, you're going to have a hard time sitting through the pullback, which is actually natural. If you buy small, then you can approach it like, great, now I'm getting the opportunity to buy what I want lower. That's how you play it. But there's another type of breakout that's when you have a market go like this, and then so where you come from matters. Okay, that's one type of new high. You can have the new high that does this, that consolidates and then makes a new high. That type of breakout is different. You're not coming from a low point and already have made a big move to a new high. You're starting with something that's shallow. I think that makes sense, right?
Yeah. And if you bought the all-time high on it and you were looking at your indicators, you had negative divergence. So
up here,
your RSI was going down, your stows were making lower highs, but your price was making higher highs. So that should have been a warning sign there.
Yeah. And sometimes it happens. I mean, you could say, well, Jason, to me, what you just described there kind of looks like right here. It's just, a frame of reference. And I don't disagree. But I'm just saying, as a rule of thumb, if you're always trying to buy new highs, your timing is going to be all off. You want to kind of get used to being in these pockets here. And then, if I buy well here, and then it's like, man, I'm going to add there. That's okay. I mean, that happens. Sometimes you add on a new high, but that's different when my average cost is lower. If my average is here because I'm in at lower levels and then I add on the new high and then it gives me a head fake, I'm still, I can take a break even. I have better options than.
And if you were buying what you thought was a bull flag, then you have to be able to also cut your risk if it doesn't play out.
Right. No, you're absolutely right. Where are you wrong in that scenario? Probably below this higher low right here. You know, that kept you out of all this. That's a big drawdown. But this coin looks pretty good.
Yeah, I like this. I like the chart setup. You had the RSI nip, the stows turning back up, and the bullish engulfing.
Yep. Very similar to a lot of the market right now. Well, let's look at Cardano and Bittrex, a little bit more data, I think. Cardano, this has been one of our best long ideas. We've had a great call back in April, and I got heavy again down here. You guys see the same kind of setup across the board in the market right now. There's a bullish engulfing. You know, here you had more of a retracement than 50%, but that it's not scientific. That happens, but you're still made a higher low. And shit, even if you pulled all the way back to 15, 14 cents again, I mean, it doesn't make any sense. We were buying here, took profit on the way up. There's no reason why I wouldn't be a buyer again down here, which we were. I don't even think we're going to get that low. I like the fact that we broke out above the trend line. You got back above the 8. But Cardano trades well.
What's your other moving average on there? The 8 and 30?
Yeah, that's the 30. That's what I always use when I trade treasuries. So that's a kind of a midpoint of this between the standard deviations. You know, you tend to get lower highs at or near it.
Yeah, I love using that. Well, I actually use the 31 just because it's closer to pi. But
yeah, I know you. That's good. I like it.
Definitely when the 8 and the 30 cross.
Yeah,
it's time to get heavy.
Right, that was a good example right there.
Yeah, the real money candle, the 830 cross, and it moved.
Yep. And that's just confirming the 30 is a little laggard to turn, but the 8's showing you the intermediate turn. There's your real money candle. So we were adding on the way down. You want to be patient when you're contrarian. So you pile in too high, it takes a lot of capital to bring your average down. That's a way to get in a lot of trouble when you're too heavy too early. But there was lots of places to nibble in here, and then we hit it even harder again on the right hand side of the chart. And we got some nice follow through. Let's get this cycle rolling again. The next resistance here, I mean, I'll take a little bit off at 25, 26 cents. Right.
And then when you had your 830 cross again, you really had to cut there.
Yeah, right here. First, you broke the 8. I mean, so ideally, again, right, we're taking a little bit of profit on new highs. I mean, we were sellers in this candle. This was us selling in here.
And you're going to break the 8 a couple times on a uptrend, so you can't immediately step out. But when you start getting to the 30 and then the 8's crossing, it's time to take a good chunk of profit.
Yeah, take some profit there. That's a great trailing stop method for sure. And then that way, and sure enough, you got cash, to buy back in down here, another 20, 30% lower. So I like it. Cardano's one we've liked. Salt is another same setup pretty much, but that was one of the ones we liked pretty aggressively in April as well. And we're back at some really juicy levels. This is one of those names where do you really think salt isn't around 5 to 10 years from now? I mean, anything's possible, but the odds are that between here and 0, you're going to have some nice moves. Even if you backed up to 0, you can get aggressive because you know where your floor is, and doesn't take much to go from 0 to 1 to have a really nice percent return. So I love this coin back here. Even if it goes lower, I'm going to get even more aggressive. But you can see this has been. I mean, I know, Mark. When were you in this from the get-go, right?
I got in
on this candle somewhere?
No, the little bit to your right on those lows, we really got heavy.
Right here?
Yeah.
Yeah. So that's the same level. I mean, who knows what was going on this first day, how much actually traded down here. So that this doesn't mean that much to me, but we did a lot of work here, in November. And like you said, this was really the low. So this whole area, we're back to some pretty, I mean, it gets all the headlines. It gets all the headlines up here. Wow, salt. I can't, our room lights up. I can't believe salt's at 16. Now it's at 17. Just at 6 or 7. I missed it. But it's like, to your point, now it's sleepy, and these are right at some major levels.
And it's another great chart setup. The RSI NIP, the 30, it's trending back up. The STO that's what I call the NIP when it hits the 30.
Yeah, the stock.
I still think algos are programmed to, when it hits the 30, to switch direction.
Yeah, that would make sense. I mean, every time you get down here, it's such a popular indicator.
And I'll watch it. It's getting down to like 31, 30.5, and all of a sudden it hits 30, and boom, the market reverses.
Really?
It's fun to watch when you're right at that oversold level. And it can stay oversold, so you don't get heavy either, but
yeah,
it's usually a pretty good indicator.
Yeah.
But your STO's churning up. You're getting above the 8 right now. The 30 is still declining, but you think you'll base a little bit, and when those two cross, you get heavy again.
Yeah. Yeah. And you can get, it really helps on the upside too. You got to be taking some off here. Just a percentage move, 2 to 5. I mean, where do you get that type of move in other markets? But this is gonna rip again. As soon as the market turns, Sol will be right back at $4 or $5. And then if we get Bitcoin above its 10,000 pivot, I mean, there's no reason why salt won't be at 8. It could be at 8, 9, 10 again. So this is at least probably a 5-bagger here off the lows. And then, it's just going to trade like the market, assuming they stay in business. And the fundamentals, you never know, but we get back to those highs around 20,000. There's no reason to think that salt shouldn't be back at 16. That's a nice trade. So that's the key, guys, too, is you keep a core position and you trade it around, but we'll see how many people can actually stay with the trade.
One more thing on salt. I don't trade Bitcoin with leverage or futures, but salt to me is like trading Bitcoin with leverage.
Yeah,
because it's tied so much to Bitcoin's success just with their lending platform.
Yeah, that's a great point. Yeah. And we've talked about before, I don't know how much the market thinks that these guys have actual risk to the price of Bitcoin. They actually don't. I mean, they're not actually issuing the loans, so they're just kind of brokering or acting as the intermediary between people that are actually lending the Bitcoin. So it definitely trades with a lot of beta to BTC. But that'll be the key too. I would just tell you guys, you might look back on this a year from now and say, oh, I remember when those guys we were talking about salt at 2. And I would be willing to bet that half the people that took this trade will be out before the run's done. So the key is you got to kind of, you got to sit on your winners. Like you're always saying, Mark, it's the sitting that will make you the easiest and the most money long term. So the key will be to trade a core position. And what we mean by that is you keep some and you put it away longer term and just let that work for you. And then when you get the ebb and flows, around the long-term trend, you can get heavier, take some off, put some back on, get heavier in your position, lighten up. And that's how you trade professionally. Is nobody just sits on a position and never touches it. I mean, the big boys are trimming their positions constantly. You're getting heavier, you're getting lighter. We call that add and reduce method. And that helps you with the emotions too, because we were taking profit up here, but I wasn't getting all out of my position just because what if it does go to 30? You don't know where this wants to stop necessarily. You can tell when it gets extended, but if you're trying to be, do I have to be all in? Do I have to be all out? You'll drive yourself crazy. Where if it's like, just take some off, you realize some cash or some money. And then when it gets oversold again, then you come and put that money back to work. And then on the upside, you don't lose your position is what we call it. There's some good lessons in that chart though, huh? Nano, Vic. Nano, I don't know, Wish. Alec likes Nano. Right, Alec?
I feel like everyone should have a little bit of, if that's Nano, IOTA, some alternative technologies.
Yeah, that's what I said. Mark, have you traded this?
I have not.
I traded
the first time looking at a chart.
Okay, this will be good. Well, Alec, you want to hit on it? Some people like to talk to tech, which obviously matters. We always focus more on the timing because at the end of the day, you got to manage your risk. But
yeah, I mean, I think you kind of have to hedge yourself. So with distributed ledger technology, and then you have projects that work on the with directed acyclic graphs. So with like a Tangle, and they kind of go for quicker and easier transactions. So that's kind of Nano's selling point, is that right now it's easy and very, very quick transactions.
Faster than
which if that's, it's not proven yet, it's pretty new technology, even more experimental than the rest of the experimental tech, but I think you should at least hedge yourself in it. Right.
I mean, gosh, those could be the biggest winners if they accomplish what they want to accomplish, To me, when I look at this chart, the biggest thing that sticks out is what we call the swing line. So this is just a simple trend where, a couple traders early on in my career taught me this, is sometimes it's as simple as just watching the prior candle. And so you haven't taken out a prior candle's high for this whole move down. So you haven't had one candle be above the prior candle's high until basically since right here. And so if you look, that creates what we call a swing line. So this candle high was below the high of this candle. You can look at it intraday, or I just kind of reference the close. So you notice this candle's high was below that candle's, the top of that, the candle base, right? And so didn't get above. Well, right here, actually, let me back up. Here, you'll notice you did get above the top of the body. You guys need me to blow this up? Let me blow this up. So here you did get above the base of the body, right? But then when you look at the high of the intraday move, you see the relationship. You didn't take out. You didn't take out the top of this bar didn't take out the intraday high. The intraday went above it, but the close didn't. Here you got the top of the close, didn't take out the intraday highs. To me, that it really hasn't broken it. And then you went back into the same formation. Here again, you notice how it's pretty precise. The close basically was the exact same as the intraday high. And so what's that showing you is the fractal nature of markets, where if you were to peel back this time frame, you're going to see a lot of this, right? On the intermediate term, the hourly or the 4 hour. And so all that's happening is you're getting lower highs. And you can even see that in the daily candles by using this method. So you didn't take out till even this candle was the same distance. That's a bullish engulfing down here, like we already talked about. But right there, I guess, is kind of the first place it happened. So that creates a swing line. And so one of the best ways to time the right-hand side of the cycle is to look for that swing line. And you can just sit. You can just wait. And it keeps you out of all this. You just wait. And then, boom. Okay, I'm going to take a shot right there. I'll buy. I know where my risk is. So I think you're right. You're really close for this popping. You start to give me higher highs right here. You're going to see probably a retrace at least back to 7. This looks really close to going to me. You got your cycles turning up. That's what jumps off at me right off the bat. There's not a lot of data on this chart, you know. Mark, do you have anything to add there, or Alec?
I do not on this one. Sorry.
So, and then I'll just show you. So that's the daily, but that's the swing line concept. And then you'll see it here. Let me put the bands on. It's even more of a better visual. I'll have to come back to the chart, but oh, that's sorry. That's for BTC. So when I go back to the 4 hour, there's your bands just showing you the same thing. You've been in this downtrend. We haven't been able to quite get above the bands, but as soon as you start to see this, guys, then that's the right-hand side of the chart. That's where you want to, it's a great place to get long. You do that, 8 out of 10 times, you're going to be buying the start of the move just by focusing on that little concept with something like this, where you start to understand the trend on the lower time frame. So that's good. I mean, Alec, we've had this one on our watch list for a while. I've just been kind of waiting, let the market turn up also, and then I think this is a good spot to get aggressive. If we look at it versus BTC, it's probably more of the same. This is definitely one of the younger coins, right, Alec? There's not a lot of coins that are this new. Versus BTC, you're still getting that same swing line. So you can't get above the 8, but it's close. You did get your bullish engulfing like the rest of the market. I would say, so I guess that's at what, 60,000 sats. You did make a lower low. So if the price can regain that same area that it broke, because again, a lot of times markets will move to where the most pain is. So maybe you ran a bunch of stops here and then that's your low. So if I was buying there and then let's say I was using that as my stop and I get stopped out here, I'm gonna give it one more shot and get right back in if I get the right hand side of the chart. If I get some sort of setup right here, then boom, just get right back in. Because that might have been the low. You might stop everybody out and then boom. And this is your trend of lower highs, longer term. I like it. I like this name down here. And then you will obviously want to be taking some off if we get back to the bands or you test this zone up here, take some profit up there. What else do we have in the queue? Thoughts on Omise Go? What's up, Nathan? I like Omise Go. I did some cycle work on this one for our group. Maybe the cycles are still saved. Sometimes they save, sometimes they don't. Oh, yeah, it's still on here. Okay, good. This has an interesting wave formation. I'm not sure. Maybe this looks like a bigger cycle turning point isn't going to show up here till a little bit later this month. What if we notice? I like this chart for a couple reasons. So here's kind of the longer term wave, right? It did a pretty good job of catching the highs, and then it did a cycle inversion. So you actually had price peak right with the bottom of the cycle. That'll happen a lot, and then you actually had another peak with the wave, pretty much right on. And so this has done a pretty good job with some of the major turns, and that we don't quite get that till the middle of June. And then the quicker wave done a pretty good job. I mean, you could have been buying down here for other reasons than the cycle, but when this did turn up, you had a nice rally into the top of the cycle, So if you're around here, I'm pretty sure we were buyers. It's time to lighten up, right? The top of the cycle, especially in line with a higher time frame major cycle. And then you had the same thing play out here. So it's not just about catching the turn, right, guys? This is about when you get a market turn, a lot of times you're gonna rally for the length of that cycle. So same thing happened here in April. Pretty much, you had both of those waves converge, and that's when you got your high. And then look at the cycles, down, down. So we've had the faster cycle turn up already, right? Again, here we are at the 8. And so we'll see. Maybe the market will turn, and if the rest of the market goes, obviously Omisego is probably going to rally into the same cycle frequency. You got the resistance right there. Or maybe we don't. Maybe we have to wait for a little bit lower, and then maybe we get a nice turn at this point here in a couple weeks. It's a pretty cool chart, though, right? Mark, you got to like that one.
I like that. I like the cycles overlaid.
And this is how you get a lot of wave formation. And you get bigger waves will all build into even in nature. I mean, that's how you get the rogue wave, right? Is you get these smaller waves and they build into the larger waves, and then out of nowhere is just like this massive move of energy.
Absolutely. If you look at trading like waves in the ocean, you get the small little ripples and then the wave inside of the wave, and finally your massive rogue wave, like you said.
Right. And that's a lot of what we base our model off. It's just energy and physics, because there's a lot of things in markets that matter: position sizing, sentiment, psychology. But it's all, at the end of the day, everything is energy. So there's the same wave formation. The particles are vibrating in my desk just the same as they are, shit's going around the galaxy.
And as a trader, you got to decide what waves you want to try and catch. Is it every daily wave? Is it the weekly wave? Is it the monthly wave? What is your time frame? Do you want to be watching the screens all the time? Do you want to? Everybody trades a little bit different.
Yeah, that's a great point. And that comes a lot too. It's like, well, are you bullish or bearish on Omisego? Really the next question should be, what's your time frame? Are we talking the next 15 minutes? Or are we talking the next 3 years? And then the tough part that I work with my traders a lot is trying to blend them all together. How do I trade the euro? If I'm bearish the euro and I have a 2 to 3 day rally, well, what do I do? Do I just get flat? I mean, yeah, you can do that, but how do I trade an uptrend in 2 different accounts or the same account? And how do I separate out in my mind I'm bearish, but at the same time I'm bullish for the next couple of hours? And how do I work that position? It's tough to hold in your mind conflicting opinions. We as humans, we don't do a very good job of that. We tend to, are you left wing or are you right wing? Or, what's your religious beliefs? Or am I wrong? Am I right? It's tough for us from a psychological perspective to hold a bullish and bearish opinion at the same time, or 4 different trends, or 3 different trends. I'm bullish long term, I'm intermediate term bearish, and then I'm day trade bullish. Most people will be like, what are you talking about? Anyway, that's stuff that comes with, you got to learn to it's just like anything, you got to kind of train your mind to compartmentalize, and we do different things. on how you work your position. I call that the art of the size. That's the stuff we do on the coaching level. How do these waves properly every chart coin? How do I put these on the chart? I wouldn't say it's science. It's not scientific. It's more of kind of an art. You just kind of you can kind of just see what cycle that particular asset is in and try to, you can kind of move you move the sine wave around and see if it catches the majority of the turns, then you can kind of get the rhythm. You'll find that rhythm, and the rhythm will change. Volatility changes, volume will, the rhythm of something in a range trade will be different than when you have a huge amount of momentum like we had in Bitcoin in October, November, December. That rhythm is going to change. But when it settles in, it's like the easiest thing to find a cycle is in a range trade when it settles in, because it's very, just like, I guess the example of water, you only threw one rock in, there's the same frequency. If you throw 5 in, you have a lot of different momentum in different directions, or a river is a good example. So you just kind of, you can just play with it. You can come over here on the left. Sorry if I'm getting your name wrong. The sign line down here, and you just have to you can play with it. But I mean, even on a smaller time frame, what is this, a Misago? I'm looking for a highs and lows on a smaller time frame. Well, we also count out, right, Mark? We count out the cycle. So you can count out the candles. You're counting those blocks of time. And so if you look at my Bitcoin cycle, it's 8.6 is the length of the frequency, right, from trough to trough or peak to peak. But sometimes sometimes it won't be on an 8.6. I mean, the thing with the 8.6 is it's so cyclical from a pi perspective that it's a very dominant frequency, and it exists on it. Doesn't matter what the chart is, you can find the same. You'll see that same frequency. It has to exist on all time frames, otherwise, it's by the definition of a cycle wave. It's not legitimate. But then you'll have
I usually don't go less than a daily chart.
Yeah. But here you can just see, like, I just overlaid this just real quick, right? And you'll see that we use an oscillator, which is an equation of motion. It's it's a similar cyclical concept. It's a little bit easier to use, but you can see here was a high, here was a low, here was a high, here's the lows, But yeah, we mainly use these cycles for the longer term stuff. I'll use an oscillator though when I'm day trading all day long. We're flipping between the 5-minute, 15-minute, 30-minute constantly. But yeah, I don't get on with my guys on the 5-minute chart and try to draw the cycles. It's, it only takes one thing out of Draghi's mouth and they'll blow that, make that cycle look kind of silly. 8 and 30 regards the EMA or SMA. It doesn't really matter, Andrew. I mean, EMA, SMA, to me, these are all areas. So a lot of technicians will treat a moving average like I want to be bullish if I'm above it and bearish if I'm below it. I mean, I don't teach that. I look at it as an area. So you're going to tend to get lower highs in the downtrend in these areas. I mean, you get pretty twisted up if you just want to buy when you're above the average. And then, so whether you're using a simple or an exponential, it's not that much of a difference to me. It doesn't really matter to me.
If you do use that concept, I like getting above the 31 and then back testing it and holding it before you get long.
Sure.
Otherwise, it's just a head bump and you're further on down. But if you bought that breakout, you would have bought the high there.
Right. And the direction. I care more about the direction, you know.
And absolutely direction. Is it turning up or is it turning down?
I mean, what I think Mark's talking about is what we call a 30 halt, where you get above it, price gains some traction, and then you come back and it actually halts at the average as it's rising. Those are some of the best. Usually
that's my favorite spot to buy.
Yeah, that's a good move there. Well, anyway, we'll do a couple more coins, and then I know it was nice that Mark jumped on. I got a couple meetings here this afternoon. WAN.
Did you guys see about 20 minutes ago, it was reported by Visa that a few million people in the UK and Europe are unable to process transactions.
From Visa?
Yeah.
Oh, crypto.
Big network outage.
So we're having a field day with that, huh?
Yeah, it seems like it. Hey, it's a use case.
Kick them when they're down.
You want to throw up ZRX quick? We got time, or are we winding down?
No, we can. I was just gonna. Somebody was asked about this guy.
I'm sorry.
That's okay, buddy. Not familiar with WAN. Are you out?
Yep.
Mark? You are.
It's a good project.
This kind of looks similar to the market. I like that it's a newer coin. So this was the base right out of the ICO, right? And then you broke out. I'll just teach you guys one other concept. There's times where I would trade the equity open. And the nice part about when you trade the stock open is you get energy burst right away. And so when you're opening up a stock, it's kind of like an ICO. So one of the strategies you can use is you mark the high and the low of that first candle. And so when we would day trade the open, we'd do it on a 2-minute chart. So if the stock were to gap up, I let the first 2 minutes of trading go by and I mark the high and the low. And if it trades above the high, then I go long. And a lot of times that's just going to give you the first direction right out of the gates. And so to me, I care about the close. I don't care so much about the noise on the ICOs and the wick, because you don't really know what traded here. Like these could be bad prints. But when you open and then you close the day, you give me a pretty good range to work with. So what's interesting here is that you didn't take out the high until after you did the space. But then once you got above the high, it's kind of that same concept that we would do on the open. And then you had a nice run. So this was your first leg up. And now it appears that most likely you're going to get another higher low relative to here. And I would expect to see another leg up. We just need the market to turn too. Once the market turns, it's probably gonna go back to these highs. What do you guys see there? Same intermediate term downtrend. We're trying to get above the 8. Very similar to the market.
I see similarities in all these charts. It's like the market's starting to churn.
Yeah, exactly.
And they're all aligned. They're all aligning. I think for a bull market, everything has to align. I mean, first you had Bitcoin rally, and then alts would pull back, and alts would rally, and Bitcoin pull back. But for a true bull market, everything needs to rally together. And I think we're getting to the point where everything is aligning.
Yeah, that's a good observation. There is a lot of difference between BTC and the majors, as we call them. I think it was more so that those relationships, I think, I don't know if it's people weren't really, everybody wanted to chart everything in BTC. And then that when we got more tether pairs and more dollar pairs, it's a little bit, again, like we've always taught, I can't really see what my WAN coin or my ZRX is really doing in the market, because unless I compare it to dollars, like I want the thing to rally and sell it to make dollars. I'm not, or I want more BTC. But if BTC is crashing and I'm looking at a chart versus BTC, it doesn't give me a true perspective of what this particular asset's doing. So we always like the chart versus the dollar if we can. And it seemed like there was a lot of just different, I guess, there was a lot of correlations between the alts and Bitcoin. And now it does seem like they kind of trade together more. We'll see. I'm just looking at the weekly. If we basically did 4 weeks up, now we did 4 weeks down. From timing perspective, it might be another 4 weeks back to the upside.
That 8.6 candle again.
Yeah.
4 weeks up, 4 weeks down.
Yep.
I think
there's another turn you could put in there.
I think a few people want you to take a look at Chainlink.
What's the symbol on that one? You guys know. What's the symbol on that one?
Link.
All right, I haven't traded this one before. So sometimes guys, you can't get versus Tether or the dollar. So BTC is always obviously the next best thing to chart with. On the weekly, I see some consolidation, right? You got basically this going on, lower highs long term, and then you got higher lows long term, right? So this pattern longer term is really basing, right? So you're going to reach an apex here at some point, which just means this is going to narrow, like we're talking about, Mark. The coil is, the energy is compressing, and so you either get usually a big move to the downside, or you're going to get a big move to the upside. The weekly cycle's done a pretty good job. There you got a high. Down here, you pretty much got didn't pick the low that well. But that's what I see on the weekly. Go to the daily. It's been pretty quiet. I like it. I mean, if you're long, you know your risk is here, right? If you take out those lows, then you got to think about a move back down to here, unfortunately. But at least you know where you're wrong. And then, depending on how you're playing it, you could be core long here. Maybe you buy a little bit more if you test these lows. If you hold it, look to get above the 8. You can add to it. I'd be taking some profit up here. You could probably draw a trend line into this area. It's pretty good. You're just probably largely in a consolidation mode on this guy. But your trigger on the up is definitely right here, right now. You get above there, you'd have new higher highs. And then you could think about a move back to this area. You want to hit 0x, Mark? I was thinking about adding today. I don't know if you saw my post. Did you add any?
I did not.
Hopefully it didn't bounce. All right, so guys, this is how we do what we call top down. Is you start with the higher time frames, and then you work down. So the monthly on 0x, there's not a lot to work with here. Obviously, there's only 5 months, so you don't have any cycle data, right? The only thing is that you are making higher highs, and you took out the prior first month of trading, so that's bullish. And then I go to the weekly. You're starting to get you had a nice swing line. You had a nice weekly swing line play out. So that concept we talked about earlier, right? Didn't get above the prior week until basically right here on a closing basis. So that got you on the right-hand side of the start of the uptrend. And then we had a nice run, 1, 2, 3, 4, 5, 6 days up. If you want to count blue candles, there's eight weeks up off that low, right? So it doesn't surprise me. Now we had basically a 3-week reaction. So when you have a strong move, 2 to 3 months is kind of a natural pullback. And we're holding the 8. So a lot of times when you have a 2 to 3 candle reaction, you will hold the 8, and then a lot of times you'll get another move to a higher high. So we've been buying here, but this is all bullish on the weekly level. Don't really have a good cycle, but you can kind of count that out. should have been taking some profit. I mean, I started taking some profit here because we were pretty early in this. Taking profit on new highs. And then the daily is nice. So where were your ads recently, Mark? Were you buying in here at all?
No, I bought in March and I'm sitting.
Oh, okay.
I should have took some off the other week. I discussed it and I failed to, and then it pulled back. But I'm measuring this one in Bitcoin because I took a full Bitcoin into ZRX, and
okay,
I'm debating whether to get my free Bitcoin back and hold the ZRX or let it ride for a while yet.
Yeah, maybe do a little bit of both. I mean, this was the base here we broke out from. And then this is a great spot to add at the bands. The cycle is really low here. But there's a lot of trading going on. I mean, when you get these big pops, I mean, there's opportunity to lighten up on a little bit. I mean, it's easier for somebody that's trading full time, you know. You can't always get in to decide all these intraday moves. But daily looks great. What I was looking at today, well, that's versus BTC. But anyway, guys, that's bullish for sure. That's one of the coins we really like. But when I went to the hourly today, I mean, we're back at some pretty good levels that we've had pretty good rallies off of, right? So I think I'm probably going to add to my position down here. I talked about it in the room and trade it around. I mean, 97 cents to $1.15 is pretty good percentage move, right? What is that? So, you know, you can pull out, there's 25, 30%, right? These are nice little 15% moves. So I like it. I like it core long. Oops. That's all I have to say about that, Mark.
I like this long term, and I need to start adding and reducing a little bit, but
yeah,
when you're sitting on a 200% winner,
right?
Sometimes you get caught up trading it, and it's better to sit too.
Yeah, that's true. Yeah, that's true. You can end up taking yourself out. All right, guys. Well, we're going to try to do some more of these live sessions. I'll just let anybody that's kind of new know where to find us. I got so many tabs open here. So we have a couple of different companies, but Block Edge Capital is our digital asset management firm. We're also working together on a trading platform we call Rhythm, kind of in the pre-ICO stages. But if you guys have a question about any of this stuff or just joining our crypto team, our education company is under Jenkins Risk Management, jenkinsrm.com. And it's free to come in the chat. We have a couple paid rooms, but this room's free here to come in. Just click the chat room. We can get you wherever you want to be. I mean, we have a trading course that we offer. It's 9 hours on my institutional model. It's all on demand. I think, Alec, you said there's like over 300, 400 hours now in there of archive videos and stuff. That's probably the best place. If you want to really learn how to trade and you don't want to spend years figuring it out, I mean, I just put you on my shoulders of 10 years doing this institutionally. And then the live room that we do a lot of work, that's all under right here, this tab. So we have a crypto room. We're signaling what we're buying and selling and what the model's pulling out. That's only $100 a month. And then this is the trading course I was just referencing. And then the live coaching session, this is where we trade together every week. So we're trading crypto together. We're trading the euro, whatever is moving. We're working on our trading game. We're working on a risk management or psychology, a trading plan. That's really where you grow the most as a trader for sure. But Mark, man, thanks for joining us. Hopefully you have time. We can do this some more.
It was fun. Yeah, on the courses, you know, all I can say is tuition, education is never free. You're either going to blow up an account and pay it, or you can pay somebody to mentor you. But education is never free.
That's a good way to put it. That's for sure.
I know I blew up an account early in my career. It's not fun.
Yeah, I've done it. I've done it a few times. That's the thing with trading too, is when you learn, it costs you money in this business, you know?
Yeah. Education is not free.
Yeah, that's for sure. All right, guys. Alec, as always, you're always a good wingman. But we'll see some of you guys in the chat room this weekend. See if we get any interesting moves. And if we don't talk to you, Mark, enjoy your weekend, partner.
Will do.
Alec, I'll be in touch with you a little later. Guys, thanks for hopping on. YouTube land and a few of you in the webinar. All right, guys, we'll catch you later.
See ya.